What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. Those 12 free stocks will be worth up to $30,600. There's a link down in the description box of the video. Click on that Webull link. Open up your new brokerage account today. Go get that free stock. Go get that free money. Well, next week is going to be a pretty important week, guys, for us as American citizens and pretty much for anybody living in America. Next week, the Federal Reserve is going to be meeting on June 13 and 14. The inflation report is going to be coming out on June 13th. So on June 14th, the Fed will announce whether they're going to increase short-term interest rates or not. Now, the market believes they will not. 80% of the experts believe the Fed will pause in June. 20% of the experts believe they will increase interest rates by 25 basis points. So the market is expecting no interest rate hike. If the Fed does hike, then of course, I think the stock market will sell off. That's just my opinion, because the expectation is they won't. But if they do, boom, I think that creates a sell-off in the stock market. But in my opinion, I think the Fed will pause. I think they're going to give the economy a break. Remember, they've met 10 consecutive times and they've increased interest rates 10 consecutive times. So I think it's time right now to just pause, take the temperature, and then in July, when they meet towards the end of July, most experts believe they will resume hiking interest rates. And the reason they'll probably resume hiking interest rates is because obviously inflation is still quite high. You know, inflation is just a tad bit under 5%. And really, the Fed wants inflation at 2%. Long ways away. So they're going to have to make some progress in order to get inflation from 5% where it's at today, I guess it's 4.9%, down to 2%. And the reason inflation is being so stubborn is because of this red hot labor market that we find ourselves in here in the United States, right? You got headline inflation that's coming down, but core inflation is still being sticky and stubborn, right? So the Fed is saying, hey, we don't want to destroy the economy and throw us into a recession, but we believe inflation needs to be at 2%. Now, there are people out there that don't agree with that. Some people believe, hey, we can get inflation down to 3% and we'll be just fine. Why are we hell bent on getting it down to 2%, continuing to increase short-term interest rates and destroy the economy? So that's one train of thought. The Fed's train of thought is, hey, with prices as high as they are on our goods and services, people can't afford the basic things they need to live. And the only way they're going to be able to afford the basic things they need to live is we got to get inflation down to 2%. And if that means temporarily we got to crash the economy, to do that, then we're prepared to do that. Keep increasing interest rates, one meeting at a time, and let's see if something breaks, right? The only way I think you get inflation down is something will have to break. Now, what breaks, we'll see. But the Fed is on that tightrope because they believe 2% is where our economy is the healthiest. And of course, like I said, others out there disagree with that. They think 3% would be a target that our economy could live with. Real estate market is being affected, especially commercial real estate. Why? Because you got $1.5 trillion worth of commercial real estate. Loans are coming due. And with interest rates through the roof, guys, a lot of these commercial real estate owners are not going to be able to refinance at a low enough interest rate for them to be able to make the property work, cash flow, pay for itself. So there may be some problems in the commercial real estate market over the next year. Fortunate for the residential real estate market, you got a supply issue. You don't have enough supply. So even though demand is down because of increased interest rates, supply is still down as well. So you don't really see a real downward spiral right now for residential. Could that happen? It could. Depends on how high the Fed has to raise interest rates. What about the stock market? Well, of course, you know, the higher interest rates go, the worse the stock market does. That's the relationship between interest rates and the stock market. And the reason is, you know, the stock market is made up of companies. And when those companies can't borrow money cheaply to invest in their growth, then they tend not to grow. And if companies are not growing, investors don't want to put their money in companies that aren't growing. Investors want to put their money in companies that grow, that produce profit. Therefore, their share price goes up. Therefore, investors make more money. So that's why increased interest rates hurt the stock market, because companies can't borrow money cheaply and companies don't grow and companies make up the stock market. So if companies are not growing, the stock market is not growing. So that pause in June by the Fed, I think is going to happen. They have to. I think they're going to pause and then resume rate hikes in July. It'll be interesting to see what happens, but either way, y'all know what I say the directive is. Keep buying assets because they're still on sale. And as long as they're on sale, you got to keep buying them. Because at some point in the future, guys, I don't know if it's 2 years, 3 years, 5 years, those blue chip assets are going to trade at a premium again. And that's where we make our net worth. So don't get bogged down in what the Fed does next week. Yeah, we want to know the information. We want to have an idea of what's going on. But we don't want to let that scare us or prevent us from buying assets. We got to continue buying assets because they're on sale. So this may be a good opportunity for somebody to pick up some more. And you guys know, I already told you, don't try to be the expert. You just want to pick up ETFs that track the S&P 500 and track the total stock market. That's exactly what you want to hang your hat on when you're thinking about what do you want to invest in order to build wealth for yourself long term. So that way you're not the expert. You're not trying to be the expert. You lean on companies like Vanguard, right? You lean on companies like Fidelity, Charles Schwab, who have these ETFs already set up and rolling. I like Vanguard, and that's who I choose to buy my ETFs through. You have to figure that one out, but that's the route I would take if I'm someone who doesn't know very much about what's going on in the stock market, but I'm okay looking at a trusted company like Vanguard to be able to be the expert for me. And that's what I do, guys. I'm no expert in the stock market. I don't try to pick individual stocks and read balance sheets and income statements and, you know, all that other stuff. I ain't got time for all that. I just go to Vanguard because they've already done that work. They've already vetted every company in the S&P 500 ETF that they got. They've already vetted every company in the total stock market ETF that they got. They've already vetted every company in their technology ETF, VGT. So I'm good there. That's what I'm gonna ask you guys to do. Just wanted to give you guys kind of update on what's going on in my opinion, what to look for next week in my opinion. But at the end of the day, you got to go out and do your own research, do your own fact finding, come up with your own solution and your own opinion. If you want them 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.